this is our first interview in 2018, right?
Yes, thank you for having me. Happy New Year to you.
Happy New Year to you. And do you mind I asking you about the New Year resolution in the trading?
Well, as far as the what we're seeing from the floor, it's a new year, but it's the same old market. You know, we keep grinding a little bit higher, and I don't think that trend will continue. Won't not continue. Meaning, I see some legs to this at least through the first half of the year.
Well, traditionally speaking, first week of the trading in 2018 usually sets the market's tone for the remainder of the year. But seems like the enthusiasm is so overwhelming, right? So do you think this can be seen as the real danger sign?
I wouldn't use it as a danger sign just yet. It's not complacency yet. There's a lot of new money that's being put to work in the beginning of the year. You saw the S&P's up over 2% to start the year. That does show some signs of strength for the remainder of the year historically. But I don't know if you can take history and say that's going to repeat itself this year. This is kind of an all-new market as far as what we're seeing from the government, as far as the rally that we saw last year, what the S&P is looking at, what the PE for the S&P is looking at. There was a report out today that talked about the shares that are outstanding in the S&P as what it is in 2018 as it was in 2006. So there's less for people to invest in right now, and that's why you're seeing these multiples in these stocks increase so dramatically.
And also the upcoming earnings seasons and the January effect will likely mean more gains in the first quarter. So how do you rate the data so far, and will you be wary of the looming correction in Q2?
Yeah, we keep talking about this looming correction, and we have been for a while. I would be remiss if I said I don't think we see anything until at least the second half of this year. And that would give us 2 quarters to see what tax reform does, to see what the corporations are going to use with all this money, see about all this new disposable income from the individual. Where does that go? Where does that get filtered to these companies? So there's a lot of exciting things over the next 6 months. So that's as far out as I'm really going to look. And then I would take a look as we get to the second half after midterm elections and things like that, after companies have already said what they're going to allocate the money for, then maybe you'll start to see people say, you know what? Whoa. My outlook is definitely strong for the first 6 months. I don't think there's anything that's really going to slow this market down. People are optimistic, companies are optimistic, and Europe and Asia now are starting to pick up steam. So that can be very helpful to the U.S. if it slows down at all. There's an investment cycle that's going on not in the U.S. that could buoy this market.
And also for the commodity market, the good prices today pulls back its dollar again. So what is the outlook on the short-term good prices? Do you think it still remain favorable?
Well, gold's surprisingly been strong, considering the cryptocurrencies out there had taken a lot of luster off gold. But it's had a sharp rally here. But now we're getting to these sticking points again where gold just can't break through. Is there a reason to break through? I'm not so sure there's a reason for it to take it considerably higher based on what's out there. There's no fear factor. There's not a huge allocation by professional money that said, I must own gold in a 10% threshold. So that's, oil's been strong. So I think gold, you have to, if you're looking at it, you say, you know what, I've gotten some pretty good gains. I bought the dip down at 1250. Now it's over 13. Maybe I want to start unwinding some of that, keeping some just in case it pops, but being ready to buy on the pullback again.
And as you mentioned, for the crude oil prices today, the doubts as to whether or not the rally will continue to creep up time to time in the eyes of the investors. So what is your outlook on the crude oil prices?
Well, you start to get U.S. companies, they're coming online more and more, and now they're starting to allocate. They allocate money twice a year, in January and then middle of the year, where they're saying we're going to devote X amount of our money. With oil being at 61, they're going to be making a lot more money in this period, and at least for the foreseeable future, as long as it stays here. But you have to wonder when OPEC starts to say, you know what, at this price, I'm going to start exceeding my quota. And that's the big concern of the market. That's why you haven't seen the market take the top off and really go considerably higher. It's been stuck here, but it's at the higher end of almost everyone's range.
From the geopolitical viewpoint, any interruption from the Iran side will push the oil prices in the range of $70 to $80. So what do you think of this?
Certainly, geopolitical has been the biggest fear all along. If there's something like a major producer like that, it could see a spike in oil. So that's not inconceivable. I would say that it may not happen. Saudi Arabia is going to be an interesting study this year. if they go with their IPO. How much money are they going to want to take off the table with producing oil at $61 a barrel? So they might be able to offset any kind of major disruption out of Iran.